Hi, in this video, we're going to be going over support and resistance levels as well as trend lines. All right, welcome. This is Patrick. You're trading with Prime. Let's get straight into it here. You know what? In fact, today I have a cheat sheet, so we're going to go over to this cheat sheet. We're going to talk about support and resistance levels first, and we're going to say opens and closes on higher time frames. So what I mean by this is just looking at the chart. We might be on an intraday chart, and it's really important to understand that even though we are on an intraday chart, an hourly chart, and we're watching price rally up and down here, it's important that when we're actually looking for these support and resistance levels, something that may look like a solid support or resistance level on a intraday chart might not be the same when you're looking at a daily chart. The daily chart will always trump the intraday chart. And so what I want to do here is go back to a year-to-day chart. I'm going to do this. And as price was falling down here, we're looking for somewhat of a bottom. And of course, let's pretend for a minute that this hasn't happened yet. And I'm going to zoom in just a little bit here so you guys can see it here. I know a lot of you. There we go. So as price is falling here, we're asking ourselves, where is the bottom? Where is the bottom? And the thing is what we want to do is we want to look at the higher time frames, because it's more probable that price is going to respect the higher time frame. And the reason why is, well, I don't have solid evidence of this, but I believe it's true because there are traders who are swing traders and there are traders who are position traders. And I believe that if you get as many of those traders in the same car at the same time, you know, even if I'm day trading a chart, I want to know where the swing traders are showing up, so to speak. I want to know where they would purchase a stock at, because as a swing trader, I'm going to want the best price, if that makes sense. So even when day trading, possibly let's look at other types of trading. So when we see this falling through here, price falls through, and we want to actually go back here and start to look at the different levels where, you know, buyers could in fact show up at. And so I'm going to put this across the screen here. And as you can see, you know, price, well, you can't see, it's not on your screen. Of course it's not. Let me do this for you guys. Sorry, I'm not doing any editing, so you guys are just gonna have to bear with me here. Weird. This is just what you get because we're real time. So let me zoom in, but this time let me do it in hopefully a way that you can still see what's on. There we go. Now I'm gonna pull this price from back here, and I'm gonna say, you know what, this area back here, and I'm gonna go all the way across the screen. So we can see this was one level that price really wanted to respect, and you see as it was falling, it fell through this level and then rallied back above. You can see where price ran up here and then it consolidated. So that was a good area where, you know what, buyers potentially could show up in that consolidation period. And over here, the same thing. Price ran up and then consolidated. It got above, and then once it fell through, it really snapped. And actually, I don't even know if this candle here, this candle might be a fake print. We'd have to actually go back and look. I think that's just one big gap. So that was one area. And then, of course, since we started trading below that, we were starting to look at what's the next levels that could be below that area. And so if I follow my cursor back here, we could say there was previous support in this area, and you can see price ran up and it got above and it consolidated here. So this next area was also support. And now the question becomes, since we've already broken, we actually had a trend line on the screen before, and I believe it was like this. I believe it was somewhere in here. And this is kind of why it's a zone. It's because price could always go through there. And because we traded sideways in time through this area, we had to really ask ourselves, was this really the bottom? And of course it wasn't. It wasn't until the actual day came in. I believe that was on Friday. And so what we did is we pulled a level from back here, and we tried to fit as many candles on this level as possible. And this is the one we came up with. I'm going to clear the screen one more time so I don't give anyone a headache with 75 lines on the screen. So you can see where it had one tag, two tag, three tag. So what we're doing is we're giving ourselves higher probabilities by using multiple things, where maybe 1 million traders are actually watching the trend line. Maybe there's another million traders that are watching this, swing traders that are watching this price level back here. And if we can align these things, oh, and by the way, we have a moving average up here too. See how we're starting to put things together as far as the different indicators. Now, just for the record, I don't use any other indicators. I just use volume, price action. I do use moving averages on occasion, and I do use support and resistance. But let's say you are a MACD user and that works for you. That's great. Keep using the MACD, and you know, if it works great for you and things are working, there's no reason to change that. Now, if you can find an indicator or something on the MACD that gives you a signal or a sign or a you know, a flag in your face that says, hey, buy me, before you buy it, take a look at the trends, take a look at the actual price action, take a look at the volume, put it all together and find what works best for you. Now, back to our whole purpose of this. I'll go off on a tangent here. Gaps, gap fills, gap windows. To be honest with you, I find all three work great. You could put gap fills and gap windows in the same category as gaps. I believe let's say price gaps higher on a day, I believe that opening print can be a good support level. It doesn't mean I want to chase it once price does gap. I don't necessarily want to chase that. But if let's say a few days later, price starts coming down to the gap window, that might be a good area to you know, it could act as support. And then of course the gap fill, once price comes back in to fill the gap, sometimes there are a lot of buyers that show up there. Again, that's probably more self-fulfilling prophecy. Caution on the number of reactions. That's the thing, is when we're trading, if I go back in here to a hourly chart, and you know what, guys, since we are live, we're doing this real time. You know, I might say things and kind of go over them 7 times. So that's just kind of what we get. I'm not going to edit these. So here's the thing, is once price falls through here and you see the ball bounce up, it bounces up again, it gets rejected. You can see the difference between these days. It got rejected once, it got rejected twice, and see the difference. It ran up again, and then this time it went sideways. And we did a post about this. In fact, in last night's video, we talked about this, where if price is having a hard time getting through an area, and instead of saying it like that, if price gets rejected once, gets rejected twice, and now it's back up here, the more times price bounces up into this level, knocking on the door, the more likely it is to gap higher. And this was in last night's video. And of course, price gapped higher. And the same thing is true on the downside. If we have an area down here and you see price fall through once, fall through twice, fall through 3 times, if we come back down here, it's more on the unlikely side that price will hold. It's more likely, in my opinion, that price is then going to fall through our March. This is the March low trend line. It's more likely price will fall through that area. It's possible that it holds and it finds it as support, but the more that it pulls back, the more unlikely it becomes. Again, probably another self-fulfilling prophecy. So this is the thing, is I had a trader recently ask me, why can't we use the high from up here? And I was telling him, like, you know, we can use that high. That is an area where, you know, we pulled the trend line off of here. It is pretty steep. And part of why I don't use really steep trend lines, even though they do work, especially in market crashes, the part of the reason why I don't use them is because sometimes you'll see price trade through the trend line in time and not necessarily price momentum. However, this time it did trade through with somewhat of a momentum. It shot through. So both scenarios would work. In fact, both scenarios would play out. In fact, now we can do another one like this. And this is where we have to be careful, because something that we see on our own screens it might not be likely that 3 other million traders see the same thing that we see. So if we start moving around trend lines too much, we might be doing them under the impression of bias, and maybe we'll have a different kind of reactions at those prices. So as you can see here, I also have a support level to 342.50, which we went over this when we were on the daily chart. And looking at the support level itself, again, you saw price get rejected or fall through, comes back up here, and I know this is more of a zone. Maybe it was down here, maybe it was up here, but either way, it got rejected. Price ran up again, it got rejected. Price ran up again, and this time it's been trading sideways. In fact, this is one large pattern here. And so even right now, we could look at this and say, well, there could be possibilities of higher prices. You know, we'll see what tomorrow brings. However, again, the more we bump up against that resistance level, the more likely we are to go above it. And the same is true on the downside. Let me get back to the notes so we can make this video shorter than me rambling. Align with other factors. We went over that. Let's align it with indicators, your MACD, your trends, your volume, your time of day. Like, am I taking a trade at the 10 minutes before the market close? Or am I doing things that are more probable trading, like taking it in the beginning of the day or earlier in the day? Candlestick patterns. Do I see a doji candle on that reversal? In fact, let me go to, just so I can show you guys something really quick. I saw something today in Huya. I don't know if that's how you say it. I apologize if. Okay. So what we saw today was we see the same kind of weird bear flag thing going on. This pattern here, we saw a move down and we saw this bear flag. And here's the thing is there, it was likely because of how fast we ran back up here, and like we were saying before with momentum, is if because we ran up here really fast, we were more likely to have a reaction. However, we've been trading sideways the last few hours here. This is the hourly chart. We've been trading sideways. It's more probable that we break through this level. And if we did break through that level, where would the next level be? Right around here. There's a gap here. And it's the high of this candle that this is a area, this entire area here, you saw price fall through this level. You saw a rejection here at the high of $30.62, and then price created a flag and then fell through. Now it's a gap window, so I would expect if price ran up here, let's say it happened tomorrow and the next day, that would be, in my opinion, a good area to short. Now, if it takes a week to get up there, let's say price is just like trickles up here, it's not the same thing. If you want momentum, and that's the best time to take these trades is on momentum. So you could have taken this price level right here as a trade idea for a short trade. However, we've already run up into that area once, twice, 3 times, 4 times. 4th time is a charm. It's most likely going to go above this area. We'll see tomorrow. I don't want the hate emails, but if price doesn't do that, but we'll see tomorrow. Let me go back to the SPY and let me get back to the notes. Okay, trend lines all depends on the name you're trading. So I just showed you Huya, I just showed you S&P 500. We could go over to FedEx, which I believe they had good earnings after hours. This is the thing is like, so maybe something will work on the S&P 500. And this is why I also think that it's important and good to know which stocks you're trading. When you start to get to know them, you'll start to see how they behave. You know, if your favorite stocks, like how do they behave? Because maybe AMD doesn't behave the same as FedEx, you know, maybe they behave a little bit different. Depends on the time frame you're trading. So again, if I'm trading let's say I'm a swing trader trading this, or let's say I'm a hourly chart trader and I'm trading this, maybe this trend line will hold on an hourly chart, but as soon as I go over to a daily chart, maybe it'll be a different story developing. So that's another thing to kind of keep an eye on is where can I line these tags up the most? Where can I get the most number of reactions? As you can see, we could even call this entire thing a channel, right? And until this breaks down or breaks out, I could just trade the high and the low. Every time it gets high, short, you know, every time it gets low, I could go long. You got to be really careful. Don't take my word, you know, for that, because it can be painful waiting for the higher low. But in theory, you could just be trading the channel, but maybe that'll show it better on a daily chart than it will the hourly. And mind you, let me do this. Let me zoom in like this, because we are on an hourly. If I'm on an hourly chart, let's say I'm on a 4-hour chart, the chart might look a little bit different than I was on a you know, a daily chart, and I might be looking at this saying, you know what, I can pull up some lines here, and let's say I see another one right in here. It's more of a channel. You know, on a 4-hour chart, I might be chopping through some candles here. And then if I go down to an hourly chart, maybe it looks like a wick and not the actual candle. So in my opinion, it's okay if you go through candles. What's important is you're following that trend. That's the important thing. It's conceptual more than it is about exact figures. Same thing on trend lines. Align it with other reasons, which we talked about in the very beginning: support and resistance, gaps, volume, etc. Your MACD, RSI, whatever indicators you like to trade with. And of course, what works for one person might not work for another. You know, your favorite YouTuber. Oh, and by the way, speaking of favorite YouTuber, let me throw a little. Speaking of your favorite YouTuber, go ahead and hit the like button if you're getting value out of this video. Subscribe, hit the bell notification, the whole works. We go live Sunday 5 p.m. Pacific Standard Time. And also check out the website, rtbtrading.com. We do have a Discord. Check it out. Thank you. Turn off their infomercial there. So what works for one trader might not work for another. So your favorite YouTuber might have like some indicator or something that they do, or some weird thing they do with their charts. Like, it's good to learn all of these things, but mind you, at the end of the day, if it works great for you, if you know, then by all means keep doing that. Like, that's what's going to work the best. Market sentiment. How many, we talked about this too, how many other traders are watching the same trend, right? So if I'm a day trader, again, if I'm a day trader, I want to know what level swing traders are going to be purchasing this thing. All set yourself up for success. You know, it'll work until it doesn't work. That's one thing we do know. So if you did see this whole pattern here, as I'm going to highlight on the screen, you see this bear flag. So technically speaking, you could buy support and sell resistance every single time until it stops working. You know, because we do know that eventually that'll stop working, just like buying this trend line off the March lows. That'll keep working until it doesn't work. So you could technically keep buying that trend line until it doesn't work. In fact, I would keep buying it until it doesn't work. But you really gotta be mindful. You gotta pay attention to things like these. This pattern right here is bearish. It's not bullish. I know it's at the top of a trend. It's at market all-time highs, but technically speaking, this is a bearish pattern. You know, and just looking at this chart, it's probable. Well, I don't want to say it's probable. It can break out above this area. That absolutely can happen. Keeping in mind, you know, if it does break out, it's most likely, if it does break out, it's most likely going to go up here to the opening of this gap right before the all-time high. So I hope that helps you guys. I hope you've gained value. Let me know what indicators you guys like to use. Put in the comment section underneath the video. Let me know what works for you guys. If you guys like using the RSI, if you like to use the MACD, you know, the clouds, whatever you guys like to personally use, put that underneath. And then as far as the trend line, same. You know, if you like to use the open and closes, if that works best for you in the charts you trade, feel free to put that under there. If you have any questions, feel free to direct message me or put it in a comment form under the video. I'll see you guys in the next video.